Welcome to Wall Street Confidential, the show we give you the inside scoop as to what's really happening on Wall Street. I'm Greg Greenberg, and with me, as always, Jim Cramer.
Hey, Greg.
How's it going?
Well, you know, I think there's a rhythm to these recoveries. When you get the snapback over in Europe, there's an inclination to think we're bottoming here.
Getting a nice snapback in the financials today.
Yeah, I think that you always have to fade the opening when the opening's up big. There's 1 in 4 chances that the opening holds. Now the opening's coming back. But the other thing is that you can't wait for it to go back to zero because it tends to still react and be buoyed by European money. I would predict at a certain point today, if I were a bear, particularly between 3:15 and 4:15, I would try to spread a lot of rumors. This market will be determined by 3:30 to 4. So if you're buying now, you have to understand that you might have to buy more later today.
Now, why is the 3:30 period so crucial?
Well, that's when the buybacks stop, so it's really easy to knock the market down. That's when you can come in and say, I hear COF's got a problem. I hear Goldman has a problem. And it's really easy to take things down because those companies have buybacks, but they're not there. It's also very easy to say that you know that there's an article coming that's going to be negative or that...
Did you ever spread rumors when you were running your hedge fund? When you were rolling up your sleeves?
It's against the law. I know that people did it because I got the rumors. I was a very high-profile guy, and I was too easy to take down. That's the mentality I had, which is that it was the enforcement side that kept me from doing it, not the ethics side. The ethics side is very thin on the hedge fund business, but when there's if you foment rumor, obviously, if you foment rumor and you had the temper that I had, it's too easy for a broker when you pull the wire to just go to the feds and say Cramer's spreading rumors. And, you know, I think that that's what kept me from doing it because it was such a really easy game. Like when I say that, I mean, it's very easy to go and say, look, Lehman is long.
And it's amazing how a lot of these little rumors can really snowball across desks to become something real.
Well, I mean, I think people have to understand that when you own a stock, let's say you own First Solar, and you say, hey, listen, First Solar's had a really good quarter. Well, that's considered cricket. But how about if you say, look, First Solar's, or Bank of America's got a lot of subprime, or Merrill Lynch has got a huge amount of subprime because they bought this Franklin at the top. It's very hard to refute. Merrill Lynch isn't going to refute it. I mean, I had this happen the other day. I was going over subprime on CNBC, and we were talking about New Century, Novastar, and I mentioned IndyMac, and they only put a graphic up behind me of IndyMac. So IndyMac thought I was picking on them. And they thought that I'd done sloppy reporting. Of course, J.P. Morgan was out there saying much worse than I was saying about IndyMac, but I'm on the press. And IndyMac can't really defend itself because they want to say that they did sloppy, that I was sloppy. I'll say that they were sloppy. Most journalists don't feel like they can come back. Most journalists feel like they have to correct. And one of the fundamental things I've learned is that companies rarely get it right. Okay. But they are really good at browbeating journalists. That's enough. I mean, what I try to do in Wall Street Confidential is tell all the stuff that no one's supposed to talk about. And, you know, the notion that you call a managing editor and you say, listen, Cramer was really sloppy with IndyMac. And then they come to you and they say, listen, I think you have to make a correction. And because of my 25 years in trading, I tell people to stick it. I don't make this stuff up. It's too priceless. But most journalists, I think, would just say, okay, sure.
All right. We'll just talk about the snapback a little bit. You're seeing a little snapback in New Century today, as well as the higher class brokers like Goldman's up at $4.50.
Right.
What should we make of the snapback?
Well, I mean, I think some of these companies are insolvent, and you obviously can't trade an insolvent stock with any conviction. But you get a big decline in New Century. Obviously.
So is it short covering basically?
Yeah,
a little bit of short covering balance.
Right, but
they've made their money. They're going to take it off the table.
Yeah, but I
move on.
I think they're an insolvent company, and when I say I think, I mean obviously. I don't know. You never know. And these companies have been very adept at hiding a lot of the problems, as is Novastar. When I say hiding a lot of problems, I'm saying that I see illegality. But remember, the way illegality is defined in the country is that anyone in the Justice Department could go after any one of these guys right now. Could say, listen, you didn't mark the loans. So, I mean, they're subject to being prosecuted. And when I'm saying that, I don't think Goldman's subject to being prosecuted, but I do think Novastar is. I do think New Century is. I think Fremont General is. I regard Novastar, Fremont General, and New Century as insolvent companies until proven otherwise.
Here's a question. What can the home gamers do in terms of homework, to do their homework to find out whether or not they should Obviously, you're warding people away from these stocks. But what can they look at to see whether or not they should be owning these things?
I mean, WorldCom was corrupt and Enron was corrupt. And we see when they're corrupt, you can't game them. You can't game corruption. I always say
a lot of the analysts on Wall Street were giving buy recommendations on WorldCom all the way down because they were corrupt.
Well, yeah. I mean, I think that, the corruption's kind of pervasive. I feel like that the money's so big that it almost pays to be corrupt until the government puts people in jail. And then one of the things I've learned is that jail's bad. And I know that sounds very facetious, but what I'm really saying is that fines are good. So if you know you're going to get a fine, you know that you go and you buy, you say the WorldCom's really good and it's not, and you get fined, oh, big deal, pay the fine. I mean, it's really interesting that Henry Blodgett was driven out of the business because it was so blatant what he did, which is like the WorldCom guys, they have nothing in print and no email that indicate how they really felt about WorldCom. But Blodgett was stupid enough to put an email that he hated the stocks he was recommending and thought they were worthless, so that was an easy case to make. But I think that Novastar, New Century Financial, I think that there was fraud here. And I would have to believe that it's actionable.
All right. That's the action we'll take away. This is Jim Cramer. I'm Greg Green. That's Wall Street Confidential. That was a lot of fun.
Thank you.